What if the biggest mistake you could make with your money isn't spending too much, but owning the wrong things for the next decade? Technology is changing faster than ever. AI is transforming jobs, inflation keeps changing what your money can buy, and entire industries are being disrupted. But wealthy investors aren't just watching these changes, they're positioning their money around them. And today, we're breaking down 5 assets that could become increasingly valuable in the future, and why wealthy people are paying attention to them right now. And number 5 might surprise you.
The first asset is one that has survived countless economic cycles: quality real estate. We're not talking about buying just any house and hoping the price goes up. We're talking about properties in locations with strong demand, places with growing populations, good jobs, infrastructure, and limited supply. Why does this matter? Because you can create multiple ways to potentially make money from one asset. A property can generate rental income, appreciate over time, and in some situations provide tax advantages. And there's another important factor. You can't create more land in the same location. As populations grow and desirable areas become more expensive to build in, high-quality real estate can become increasingly difficult to replace. That's why wealthy investors often view real estate as more than a place to live. They view it as a long-term wealth-building asset.
Number 2, businesses and private companies. The second asset is ownership in businesses. Rich people understand something that many average investors overlook. You don't necessarily have to work more hours to make more money. You can own a piece of a business that makes money without directly trading your time for every dollar. That could mean owning a small business, investing in a private company, or building your own digital business. And the opportunity is getting bigger. AI and automation are making it possible for small teams to do work that once required much larger companies. That means businesses with strong brands, recurring revenue, loyal customers, or valuable technology could become extremely attractive. The key is ownership. Instead of only earning a paycheck from the economy, you're potentially owning a piece of the economy itself.
Number 3 is infrastructure and essential resources. Think about electricity, data centers, energy systems, water infrastructure, transportation, and other systems that modern society simply can't function without. Here's the interesting part. AI may be digital, but AI still needs physical infrastructure. Data centers need enormous amounts of electricity. Cloud computing needs massive server networks. Growing cities need more power, transportation, and water systems. As technology expands, the physical infrastructure supporting it has to expand too. This creates a fascinating investment theme. Instead of trying to predict which individual technology company will dominate 10 years from now, some investors focus on the infrastructure that many future technologies will need. Because regardless of which company wins, the infrastructure still has to exist.
Fourth, gold and other hard assets. The fourth asset is gold and other hard assets. Gold doesn't generate income like a business or rental property. So why do wealthy investors still pay attention to it? Because gold has historically been used as a store of value during periods of economic and financial uncertainty. When currencies lose purchasing power or markets become extremely volatile, some investors want part of their wealth outside traditional financial assets. That's where hard assets can play a role. But here's the important point. Gold isn't necessarily about getting rich quickly. It's more about diversification and protecting part of a portfolio against unexpected outcomes. And wealthy investors often think differently from beginners. They aren't only asking, how much can I make? They're also asking, how much can I afford to lose?
And finally, number 5, human capital. This might be the most overlooked asset on the entire list. Your skills can be an asset. Your knowledge can be an asset. And your ability to solve valuable problems can become more important as technology changes.
AI can automate many repetitive tasks, but people who know how to use AI, manage businesses, analyze information, sell, communicate, build relationships, and solve complex problems can become even more valuable. Think about it. A stock can fall. A property can lose value. A business can fail. But if you continuously improve your skills, you can potentially take that knowledge with you wherever the economy goes. That's why investing in education, technical skills, communication, entrepreneurship, and financial knowledge can be one of the most future-proof investments you make. Conclusion. So let's recap. The 5 future-focused assets we covered are quality real estate, business ownership, infrastructure and essential resources, gold and other hard assets, and human capital, the skills and knowledge you build. But remember, there is no such thing as a completely future-proof investment. Every asset carries risk. The real advantage wealthy investors often have isn't knowing exactly what will happen. It's preparing for multiple possible futures. Instead of putting everything into one investment, they build systems designed to survive change. And that may be the biggest lesson of all. Don't try to predict the future perfectly. Build a financial position that can adapt to it. If you found this useful, hit like, subscribe for more practical personal finance videos, and comment below. Which of these 5 assets would you invest in first?
If this video helped you, hit the like button, share it with someone who's making 6 figures, and subscribe for more practical money and investing tips. Thanks for watching, and I'll see you in the next one.